What's going on, big dog? Happy Money Monday, folks. Dawson Ricketts, Diego Guerrero. Pretty active markets right now. Powell speaking tomorrow. The one big thing for today's episode is actually another bottleneck in the supply chain of the world. But right now, we're going to touch real quick on how Adobe did. We touched on them last week.
Yeah, so we highlighted Adobe as having earnings on last Thursday, and the company was expected to make about $2.30 per share. The company actually came out and said that they made about $2.55 per share. So it beat expectations, and because of that, the stock rose a few percentage points at the end of last week, and it's riding pretty high. It's up 15% over last month. But I wanted to kind of break down, when you buy a share of Adobe, it's priced at around $570 right now. So if you look and they earned this quarter $2.50, you can assume, okay, for the year they're gonna earn about $10 per share. So that means that when you buy a share at $570, you're pretty much buying the current share at a price that is 57 times the earnings per share. And that's how you can kind of measure companies next to each other and say, what is their earnings per share? How much am I paying for it? And what is that multiple? Oftentimes you want to find companies with lower earnings per share. However, in this case of Adobe and companies like Amazon, companies like Apple, they have high price to earnings multiples, which is the price divided by the earnings per shares. They have high multiples, and it's driven by their growth rate. They're gonna grow more. This year it might earn $10 per share, but next year it might earn 15. The following year it might earn 20. So when you're at $20 per share, you're not paying 57 times, you're paying like 28 times. The multiple will change. So that's something to know about Adobe. Overall, they had a good positive earnings, and the stock price is reflecting that. That's what you're getting into when you're buying a stock. Now we go into crypto. Obviously, this has been a very volatile industry for the past 5 years, and right now we're seeing that, right?
Yeah. Right now, one of the main reasons why crypto's down is China's really cracking down on Bitcoin mining. And apparently, before all the scrutiny happened of Bitcoin mining, China accounted for 75% of Bitcoin mining. And it is currently sitting at about $31,000 per Bitcoin. So that's a huge drop from its all-time high. It's a very interesting time. Just in addition to the crypto markets, we have a very big supply chain issue going on in China as well. What's going on there?
At the Yanshan port right now, which apparently exports over 90% of the world's electronics, they had a shutdown last month due to the coronavirus. They had a spike over there. A couple of dock workers were confirmed. So they shut the port down. Now they have a big backlog of all these shipping crates that are sitting in their port. And their analysts are saying that this is worse than the ship that clogged the Suez Canal. What was it, a couple months ago that we were talking about. And so this is just another example of crap that's going on this year that's out of the ordinary, that's causing rifts in the supply chain. And now when you don't have your products, you don't have your services, people are demanding these things, and it's causing price fluctuations, and it's maybe leading to inflation. And this is the type of thing where if things are running smoothly, there's not a worry, there's not a bottleneck, there's not, this high demand and a low amount of supply. But when you have these bottlenecks happening, it's killing the world's economy, and it's throwing things for a wrench, especially prices. It'll be interesting. We'll keep you guys updated on that blockage in China.
Yeah, and then speaking of supply chain, the Phoenix Suns doing great in the Western Conference Final.
Yep.
We got game 2 tomorrow in Phoenix
On a 7-win streak.
Let's keep going, man.
Yep.
Guys, crush your weight.
Happy Money Monday. We'll talk to you guys soon. And